Happy Friday, traders. It's 8:01 a.m. Chicago time on the 13th, Friday the 13th, for those of you who are superstitious. 2020. Thanks for joining me today on episode number 1712. This is another episode of extreme trading. The markets had a pretty wide swing this morning. The indices are lock limit up on the 5% limit. I want to remind everyone that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. One thing to remember is that there's a limit down and up in the Globex session of 5% based on a reference number that's determined in the last 30 seconds of trading from the prior session. And we're at that limit in the S&P. I also want to let everybody know that I am trading, I'm monitoring and referencing the June contract this morning. As of right now, the volume in the June contract is 354,000. The volume in the March contract is 542,000. Of course, lock limit up is impacting that. So the volume's still in March, but the liquidity is there for June, and it's time to just move forward. Um, You should know that there is no limit up once the RTH session opens. Only down limits exist at 7, 13, and 20%. And we are limit up right now. So that's where we stand. So market is swinging up as a coordinated effort is expected by the world's central banks. More of a coordinated effort. And we saw a big bounce in Australia and Asian stocks, and that translates to the US. Again, we're lock limit up in the June contract at 25.82 currently. The Euro stocks are up 6.39%, huge bounce there, 164 points. The DAX is up 6%, 545 points. The Nasdaq's up 407.5 points, 5.66%. The Russell's up 60 points, 5.5%. And the S&P's had about 190, I don't know, I posted on Twitter, 196 point swing. The S&P was about 30 points from its limit down and is now lock limit up, basically having a quite a swing, basically almost a 10% swing on the range. Pretty historic action here, as I called it, extreme trading. Gold, the world's reserve metal is below 1600, below 1600. So 1592, the expectation, there's a lot of there are a lot of questions about how is it that gold is off when the market's in a panic. And this has to do with market psychology overall, in that you must understand how people behave. Once we're losing money, once we need to cover margins, once we are in a panic, we don't sit there. A lot of people don't sit there and pick and choose. They just liquidate whatever they have and they move to cash because they believe that's the safest option. And so everything um, gets hit once the market starts to panic off, right? Once cooler minds come back, generally we see the safety assets pick up steam, and gold would then recover is the expectation. But again, it's below 1600. At yesterday's close, essentially the U.S. markets wiped away all of the gains, about approximately, I think, around $11 trillion of gains since President Trump's election. We basically took all of that back in a matter of what, 2.5 weeks or so. So it's pretty intense environment right now. Um, so that's that. In terms of what's been coming across, look, my news feed has been just blah blah blahing forever. I mean, there's a lot of stuff going on. The Prime Minister of Canada has coronavirus. So does his wife. They've been quarantined. The health minister of the UK has coronavirus, and it's just really interesting. And I would encourage you to listen to the webinar that I posted on my Twitter feed yesterday with Eric Townsend, where we discuss what the risks are, and what this thing looks like. We do have some pretty significant numbers coming up. Michigan sentiment is expected to come out at 10 Eastern. This is the prelim. This is likely to move us around. Um, Expecting 97.5. The prior's 101 for March, and that pretty much wraps up the week. Again, the news feed is busy. There's a lot going on there in terms of central bankers and leaders and Mnuchin, and everybody's talking, trying to manage the situation. So it's important, if you're a Convergent member, it's important to have your CT news up and running. I think even if you don't trade the news, and I don't recommend that you trade the news, it's just important to know what's in play. So just like that repo news yesterday, we need to know if the move is technical or if it's news based. Again, not saying that you should trade it. Let's move on to what I expected yesterday. I'm not going to spend very much time on this. Yesterday, I expected the market to gap down as soon as the limit is released from 5 to 7%, but I did expect it to test the 5% limit at 2601 at some point in the session. I expected responsive buying into that limit area, into the 2600 area. Here's what there's just too much going on for me to predict, to try to predict. Here's what actually happened. We opened up, we dipped down, pushed up to 2571, put in an IB, and we're stuck in this relatively wide IB. I mean, almost 100 points, 92 point IB or so. We're stuck in this relatively wide IB, and then when the repo news came in, we pushed through and we took out that 2601 area and fell right back through. Once we fell back through the mid and into the IB and into the opening swing, to me it looked like neutral extreme down was very, very likely. It tested the VWAP, retested VWAP, and there's just no ability to hold on to these higher prices. You could see it on the tape fairly clearly. Speaking of the tape, I'm doing a talk for the Pro Trader series for Bookmap next week, where I'll be talking about order flow in the tape. That's on March 19th, next Thursday. I believe it's at 11 o'clock Eastern, 10 Central. I'll post some details on that on my Twitter feed and upcoming Trader Bites, but I'll be talking about how I'm seeing the order flow, which has to be modified for this environment. So this is what we have yesterday. We have a gap zone that we didn't close today. We're pushed up against 2601, not 2601, 2582 right here, and we're waiting for the market to open. Shorts are likely to be squeezed on the reopen. Let me make sure. Okay. Here's my here's my CT Bookmap heat map. You can see that the market's just trapped against this lock limit up range, and close the trading panel, and let's look at what it's done since then. So you have it's loading. Oop. You have a market that has swept up from 2380 right down here against some stable liquidity. This liquidity was there for quite some time at 2380. The market pushed against it. There was really no collision there. And then it rallied back up, pull back. This is the impulse. This is a classic here for me. For those who've been listening for a while, this is the impulse up, and then pull back, target the last high, and then we have this liquidity that's been sitting there for a while. Also, that that the market bumped up against. There was a pretty good lift here. We pulled back again, and then we held steady for a while, and then we finally hit. We stopped at this point. We stopped about 3.25 points from lock limit up, and then we came back to the VWAP, pushed right up against this 2582, and there's quite a bit of trading that's occurred there. The overnight point of control is in that area now. So overall, the markets are showing a lot of strength, and just remember, once the market opens, if you decide to sell short in front of this limit, once the market opens, there is no limit up. There is no limit up. Limit up only exists in the Globex session at 5%. So once the market opens, I expect it to gap up and just push through. I expect us to fill the gap from yesterday today. I expect it to run right back up into the 2730s this morning and 2740 composite point of control area. So that's what we have in the overnights, in book map, in the heat map. It's hard to tell with the order flow because everything's on pause. We can't really see what's above. I mean, normally we'd be able to see what the heat map has in it, but it's really not providing a clear picture, given the fact that the market is lock limit up. There's huge size up there at 2950. But that's where we stand this morning on that. The overnight session, let's pull that up. Overnight session, very, very healthy run up, very active price discovery. Look at this profile. And by the way, like I said, I'm showing June. I'm looking at June now. So the volume and the delta are going to be tricky until probably next Wednesday or Thursday. So you can see this profile is a price discovery profile, and it's printed these 15-minute bars as dashes, same price, open, high, low, close, and we're holding and waiting patiently here for the RTH open for this to get released to the upside. Okay, so not much to glean from the overnight session other than the fact that it's been pretty strong on the buy side. Let's take a look. Well, I'm going to take a moment and remind everybody to hit the like button today. It's Like Friday every Friday. Just take a moment to find the like button on YouTube and click on it. Let's take a look at what's expected for today. And I'm going to be very, very light on this because, as I've been saying all week or for the last 2 weeks, it's not really fruitful to try to predict what the market's likely to do here, given the higher time frame is in play, and it's just running over pretty much anything because the market's is in a mood, is in a tizzy. But here's where we are now. I expect us to reopen and push into some price above, probably 20, 30 point gap there. I expect us to be responsive right away, consolidate, tag that price, and then start to move towards the 2700. So I'm looking for the market to kind of work itself up into this high volume node that's sitting up here at some point. If it doesn't do it today, it's likely to do it Monday, barring news. Now there's still some bad news coming out on the coronavirus. I mean, I think the last I don't recall the numbers. Spain's numbers just spiked up for the number of people infected. So they're considering declaring a state of emergency. Here it is. COVID-19 in Spain rise to 4209. 4209 from 3004. I'll let that sink in. Yesterday, 3004. Today, 4209. Almost a 50% increase in one day. And I'm not sure if it's because they're testing more people, so those numbers will shoot up as more people are tested. Right now, testing is a big problem. So we don't really know what we're getting. But that's a pretty big jump. And again, Spain is considering a state of emergency. The secondary scenario is one where we open at some point, at some price, push up, poke above the 2650, consolidate, push back down, and then start to move back into value. I expect us to bounce a little bit. And then once we break into value, I'm looking for the point of control at 2,500, looking for a consolidation there, and then for the market to just rest up once it gets down there. I don't expect it to be as volatile as yesterday. I don't expect it to fall as much as yesterday, but who cares what I expect? The fact is, if it falls into value, you want to hang on to your runners. If it takes out this 2647 and into the gap, the runners are likely to see 2730, potentially 2740. So that's really what these lines are intended to do. I leave you with that. It's 8:17 Chicago time, 13 or 12 minutes to the open. Please, 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 do not trade unless you have the full margin, full initial margin per contract. I posted those this morning on my Twitter feed. You can find that at twitter.com/futurestrader71. Remember, on Twitter, you don't have to have an account, I don't think, to be able to look at a tweet. The margin for the ES is still 91.85, $9,185. The NQ margins have jumped up to 11,880. The Russell margins have jumped up to 5,170. They were around 3,400 a couple of days ago. The Dow margins are also up from about 8,700 to 9,075. Those are the full, that's the mini contract. Divide those by 10 for the micros. If you do not have full margin, please don't trade. You're taking a significant risk, and you're statistically likely to see, in other words, the risk of ruin is very high. If you're trading in this kind of volatility without full margin, it's better not to trade at all. And remember, futures are leveraged. In other words, you can lose more than the value of your account. You can go debit, and they're just, for that reason, they're not suitable for everybody. Okay, good luck, and I'll catch you on Monday, and hopefully we don't have too much bad news from here till then. Take care.